Welcome to NASDAQ Trade Talks. I'm Jill Malantrino, Global Markets Reporter at NASDAQ. Joining me is Ariel Cohen, Senior Fellow with the International Tax and Investment Center and Director of the Energy Growth and Security Program to discuss the global energy transition. Ariel, it's great to meet with you. Welcome to Trade Talks.
It's a pleasure.
And Ariel, let's talk about fossil fuels, how they have fared in the wake of COVID-19, and how much longer can we expect the likes of coal, oil, and natural gas to play a central role in the global economy as energy transition unfolds?
Well, COVID is one of the pivotal points where we saw the decline of demand. We remember the horrible month of May of last year when oil was negative 37, an unprecedented event. But what is more important is that you have companies now such as Volkswagen, GM, Ford, and others committing to the electric vehicle future. What does it mean? It means that the oil demand will go down. Oil peak probably was 2019. We lived through an oil peak, most probably, unless the developing countries do not leapfrog straight into the electric transportation, which I believe will happen maybe 7 to 10 years from now, that an electric car long-term will be cheaper to buy and maintain than an internal combustion engine. So coal is disappearing in the developed world. The Chinese are still building coal power stations, and the emerging markets such as India and countries in Africa, Latin America, still use coal, but it's declining. We are going to have peak gas probably by the end of this decade or 2030. And then provided the technological progress that we saw so far with photovoltaic and wind going down up to 80% in 10 years, those capabilities, those industries will take over fossil fuels. And the two challenges I want to highlight, because it also has implications for companies and for people making money, is battery storage and intermittency and smart grids. Once we solve the battery storage issue and the upgrade of the grid from the 20th century dumb grid that in a lot of places was built 100 years ago and we're still using it, to a 21st century smart grid with AI and predictive capabilities, and then we can move to renewables. I wouldn't say 100%. We still would need some kind of baseload capacity, but we will move in a much more significant way than even today.
And Ariel, as if the past year couldn't get any more unprecedented, to what extent will the Suez blockage impact energy markets? I mean, that was quite the unusual situation last week.
Yeah, this was a touch and go. Thank goodness they unclogged the canal. But it suggests to me that these events that some people call black swans are actually predictable. And the analysts in the industry need to understand that this can and will happen. It's a high risk, low probability event, but it's not zero probability. So we are looking at, I believe, 5 choke points: Suez Canal, Panama Canal, the Strait of Malacca, and the Strait of Hormuz. And I would add to that Bab el-Mandeb, which is an entrance to the Red Sea in the south, en route to Suez Canal. All of those can be mined, can be messed with, there can be terror attacks. And once in a choke point, there is some kind of a impossibility of passage, be it LNG, liquefied natural gas, oil, or other cargo. We saw what happened: $200 billion just in a few days. And these costs will be, of course, passed on to consumers, to you and me, to us. And we need to be very careful. I believe they should not allow ships that big in the canal. They should expand the canal. They did expand it. They didn't expand it enough. Mm-hmm. And they may need to dig a parallel canal. So if one gets clogged, the other. So you imagine a two-way street, so you have to have two lanes at least.
Speaking of oil, what's the current state of Iran's threat to Saudi oil production?
The Iranians are capable of throwing probably another 1 million barrels into the market if the sanctions are lifted. The United States, the Biden administration, correctly did not lift these sanctions, enticing the Iranians to come to the negotiating table with the Iranian nuclear deal known as JCPOA. But now Iran signed this huge agreement with China, 25 years, $400 billion, and they are less amenable to negotiate. I think the Iranians will continue to support their proxies, the Houthis in Yemen, Hezbollah Iraq, Hezbollah Lebanon, and try to destabilize the whole of the Middle East. They are an anti-status quo power. They are very detrimental to American allies, to American interests, and it is going to be a major pain in the neck for the Biden administration.
And Ariel, to wrap up here, what role will critical minerals, rare earths, and their supply chains play in the energy transition? It seems as if those components are really critical to success with EV.
As we're transitioning to the renewables, rare earth and other critical minerals like lithium, for example, for the batteries, it's not that rare, but it is critical, become more and more expensive, more and more important and expensive. And what we're facing today is dependence on China. China controls up to 90% of the production and of the supply chain. And I think the challenge for the collective West, for the United States and our allies, Japan, India, Taiwan, and Europe as well, is not to depend on China that much, because the Chinese used our dependence on their rare earth in the past. We need to develop these materials elsewhere, including here in the United States, Canada, North America, but also in Africa. And eventually, I believe, we will be mining the asteroid belt. We will go to space to mine these rare minerals.
Interesting. Ariel, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malentrino, Global Markets Reporter at NASDAQ.
Thank you for watching. Please subscribe to get more content like this.